Welcome one, welcome all to DeFi Crypto and Airdrops, DeFi High, brought to you by DeFi University and David. How's it going, brother?
I'm doing well, Mike. Outstanding. How are you this morning or
I'm doing
afternoon? Yeah, it's morning for you. It's 9 a.m.
well. Morning for me, afternoon for you, and evening for some people around the world. So hey,
Yeah,
it's 5 o'clock somewhere. So
it definitely is.
I want to ask you real quick. I mean, like, should we kind of hint at kind of what we're working on, changing this
Yeah,
show into?
I think that's a
Well,
good idea.
no, awesome. Yeah, I definitely am. I'm super excited about it. So, me and David have been talking, and we've really enjoyed doing this show. But we feel like that there's so much more value that we can bring. So instead of just doing an hour show on just entry level DeFi or going through the courses, we want to keep that, but we want to add and make this a 2 hour show. So we're, new name, new branding, new everything, and start out the show with about 30 minutes of the hot news and alpha going on that day. Have a segment to where we can bring on David knows some very high level people in the Bitcoin community and in his network. I know a bunch that we can bring on and do interviews, special guests, and then also at the end have a block to where we still do entry and intermediate and advanced DeFi and DeFi strategies and education. So we're looking to really amp this up and grow this channel as a safe haven for people that we're not going to shill, we're not going to get paid to talk about projects. All that integrity stays intact. Me and David are very aligned like that. Anything that we talk about is just purely informational. It's not to try to profit in some way off of our audience. So, hey, what's up, Crispy? What's up, Jay? Do you have anything to add to that, David?
Yeah, I'm really looking forward to all the guests that we're going to have on. That's
Yeah,
that's going to be really cool. Extending it to a 2 hour long call. We'll have time for market updates, market news. We'll be able to talk charts a little bit. We'll be able to talk positions, getting in and out. We'll be able to interview guests. We'll be able to go through educational material. Having a 2 hour block of time like that with real segments, it's going to be great. I think everyone's going to love it. I'm certainly going to enjoy, Mike, working with you and presenting all this new material. So I can't wait, man. It's going to be a lot of
yeah.
fun.
No, it is, and I mean, I don't know. I think that we vibe really well. And we could definitely, whenever Jeff's available, get him, get him in here to kind of laugh and joke with us. But it's I think just the like the red pill and just kind of some of those looser shows that we've done. I think it brings a very unique flavor to kind of what's out there because everyone's so worried about getting shadow banned and stuff like that, and we're just like we're trying to get good information out.
Yeah,
We
man.
don't care what the powers that be think. We just want to get good information out. If it's political, if it's crypto related, if it's investing, if it's DeFi, whatever it is, we just want to give you all good quality content. So that
So,
being
Mike, what's
said,
what's new, man? What's in the news?
so right now I'm seeing that, and maybe you can give a little more information on it. Is the it looks like somebody got their little hands slapped when it came to Bitcoin manipulation, and since they were forced to cease that, and the State of the Union last night that we live streamed, we're seeing some positive price action. Maybe you can peel back the layers on that, David.
Sure, man. I'd love to. Here, let me go ahead. I can just hop in and share my screen if you don't
Oh,
mind. We could
absolutely.
just take a look at maybe take a look at a chart or two here. Here, I'm going to go ahead and share screen two, and screen two is actually where um, I've got the arena. So I've got us up on the arena over on screen two.
Well,
Man, I
actually,
love this arena, bro.
well, that's one thing I want to talk to you about. I'm actually, I sent Colin a message. I want to talk to him and Jason about some sort of, working with them to, to help bring value to, to the arena because I'm a big fan of arena as well. So anyway, go ahead.
Dude,
Sorry.
Arena is awesome, man. So I finished setting up my profile a little bit last night. I really, really like it. And dude, I can't tell you how great it is to have two screens again. I was working off my laptop for like the last year.
Dude,
I like that, but it's better. It's better having
I,
two
I, I
screens
went
again.
kicking and screaming. My buddy, when I was in the military, was using two screens, and I'm like, dude, that's totally unnecessary. I don't need that.
Yeah,
And I was copying and pasting on spreadsheets and stuff. And he's like, dude, just try it. And he gave me a monitor, and I haven't gone back since. I have to have multiple screens.
I know, man. It's so much better, dude. Like it really is. And having a camera here and a camera here and two screens with some lights, it's like it's a studio setup, man. It's pretty awesome.
It's a workstation, a command
Yeah.
station.
Yeah, that's what it is. So I'm looking over here, and let's take a look at Bitcoin first and foremost here. And the thing that we have to understand about Bitcoin is that it has been positively correlated or negatively correlated with all sorts of different assets or asset classes or indicators over the last several years. So right now, Bitcoin is positively correlated with software. So we can go ahead and visualize that correlation real quick. Let me go ahead and remove this moving average. So this is a daily. I also want to remove any of these drawn objects here. And what I want to do is I want to overlay on top of the candlestick chart of Bitcoin. I want to overlay the software ETF, IGV. Okay, you know what? I need a different. There we go. Look, one more time. IGV. I need a different scale, new price scale. There we go. And so take a look at how tight this correlation is. So when
I
you
heard
when you measure
talk
this,
about
yeah,
this on day.
yeah, it's a really it's tight, very tight. Fucking,
Point,
it's like
Fuega.
it's point.
It's
It's
point.
0.7, man. That's a very positive correlation, 0.7. And so basically, if we see software bounce, that tells me that hey, maybe Bitcoin gets a bounce. And also Bitcoin's been beaten down. We haven't gotten any real type of bear market rally. Not yet. I mean, this all of this price action here, this was just a bear flag. All of this. Here's the
Yeah.
pole, here's the flag. And we're starting to form maybe another flag. So here's the pole. And then we need this to move a little bit higher for this really to be a flag here. But the bottom line is if
Now,
software
now that
bounces,
now that bottom one, is that looking like a bear flag or a bull flag?
okay, so this bottom one right here, you've actually got what looks kind of like both. So if we zoom in here a little bit, and I just want to take a look at the micro time frame. So the
Okay.
bounce off that February 5th low,
Mhm.
this bounce here, and then all of the inside bars. So notice the green candle, its body, the body of the green candle right here. All of
Yeah.
this price action is within the body of this candle. So
Okay.
because it's within the body of this candle, it's called they're called inside bars. So you've got
Okay. So
this.
basically, what you're talking about is from the top of that big candle to the bottom. It's basically it's respecting that range.
So basically what I'm doing is it's called painting a flag. So
Okay.
you've got the pole right here, and then let me just paint in this flag.
Okay.
So you got the pole and then you got the waving flag. And importantly, it's got to be downsloping. The flag has to be downsloping. And so right here, this was the pole,
It's an
and then
azimuth.
so this was the upsloping bear flag. So here's the bear flag, and here is the bull flag. So we've got a
Okay.
bull flag here, and we've got a bear flag here. Now, the longer time frames matter more than the shorter time frames. So
Okay.
this little bull flag here, it's great that it's pushing up towards the top of the range. I mean, don't get me wrong. I love to see, Bitcoin bouncing. But this entire bull flag here is less important than this bear flag was, and then this downtrend is. So the downtrend is more important than the little micro bounce that we're getting here.
Gotcha.
So this is definitely a bull flag. But the important thing here is, we got to take, oh, look at that. ETH is highs of the day, highs of the day for ETH. So I really want to sell some calls. I want to sell some calls. Now that ETH has bounced, I really want to
And,
sell some
and
calls here.
explain to people what a call is.
Yeah, so an options contract is it's simply a contract to either buy or sell a specific amount of an underlying asset at a specific point in time at a specific price.
Well, it
So,
was just specifically because there's puts and calls, and I know some people have a problem like remembering which is which. Not analogy, but the kind of what I use remember is you call somebody up and you put somebody down.
sure, sure, you could think of it that way. Um, so puts and calls and puts and calls.
Yeah, yeah.
But
Calls and puts and
I know,
calls and
right?
it's and boots and pants. Go
And
ahead.
boots and pants and puts and calls. So
Boots.
I think that the best way for me to describe this, rather than, look, I mean, a call, if I sell a call, I'm short. If I buy a call, I'm long. If I sell a put, I'm long. If I buy a put, I'm short.
Okay, so my little thing probably wouldn't work.
Well, so here, let me see. I can share actually a different screen here. I think that this might be a little bit easier. Let me bring Gemini up into view here, just so that we can like talk through this, and we all know exactly what we're talking about here. If we're talking about puts and calls and puts and calls, so I need to zoom in here a little bit so that we can all see this. All right, so these are puts and calls are just basically the two main types of options contracts. But what is a call? So if you buy a call, then you are doing something that's referred to as buying premium. You're buying premium. So when you sell a call, you receive premium. When you buy a call, you pay premium. So a call option, if you were trading, if the underlying asset here is a stock, then if you buy a call, it gives you the right to buy stock at a pre-agreed upon price by an agreed upon date, the expiration date of that
But it,
options
but it,
contract.
but it has to reach that price by that date, correct?
Correct. Exactly.
Okay.
If it doesn't, then that call expires out of the money,
Mhm.
worthless. So the vast majority of options expire worthless. Now, that's a little bit about just buying a call.
Now,
So you
what
would buy
happens to your liquidity in that case?
your liquidity if you buy a call and the call expires out of the money. Your liquidity goes to zero. Goose egg.
Okay. So
Yeah.
so it's kind of like being liquidated.
Yeah, you basically you lose all of the premium. So all of the premium that you paid to buy that call, you lose it all. But that's
Okay.
also not a bad bet, because here's the thing: if you are buying premium, and just by the way, Mike, I never buy premium. I only sell premium. But if you're buying premium, it's a pretty good way to replace stock or replace the underlying with
Okay.
leverage, because you can gain control of a much larger amount of that underlying asset for a
Mhm.
relatively small amount of capital. So there's leverage
Okay.
involved when
So
you
so
trade
it's
options.
the same thing as well, not the same thing, but it's very similar to trading with leverage then.
It is, except that it's not linear. So when you're trading futures, futures are linear. So what that means is for every dollar that that underlying asset moves, if you have 1x leverage, then your position moves by $1.
Mhm.
But if you've got 10x leverage, something crazy,
For
then
every
for
dollar,
every
$10.
moves $10.
Yep.
But when you're trading options, they're not linear like that. They're nonlinear. So what that means is if you, let's say, buy a call and that same asset moves up by $1, you might not see your call move by much at all. So, it doesn't start to move until you get closer to at the money. That's so you start to see your deltas move. And I can actually share that with you too, rather than taking a look. Let's just walk through the basic description first so that we all
Okay.
know what puts and calls are.
Yeah.
And
Sorry, I
then
got
I
you.
can
Go ahead.
yeah, and then I can walk you guys through like actually trading this stuff, because I want to open a trade here. So puts, this is if you buy a put, you're buying premium again, and this is just a bet that markets are going to go down. And so if you buy, let's say, an at the money put for $1, well, if you're trading in the listed options world, it's multiplied by 100 because you got 100 shares of stock. So that $1 put that you bought is actually $100 to buy. Now,
Gotcha.
and yeah, so and then your break even is going to be the strike price plus the premium that you paid on that put. So you really need that underlying asset to move in order to just break even. So and you've also got theta that you're paying. So you've got this time decay element if you buy premium. But if you sell premium, you end up with theta working in your favor. So
Hmm.
let's just get a really simple explanation of put options. So the put option gives you the right to sell an underlying asset at a pre agreed upon price by a pre agreed upon date. That's the contract. So you would use this if you're bearish. You would buy it if you're bearish. But,
Hmm.
I don't buy premium. I almost exclusively
Well,
sell premium. Right. So here's the inverse of this. If I wanted to express a bearish bias, but I didn't want to buy premium. I didn't want to buy a put. What I would do instead is I would sell a call. And so that's exactly what I'm going to do today,
okay.
right now. I'm going to sell a call. So, just a couple of things that we need to know, just three basic pieces of jargon that we've got to know to be on the same page. The strike, this is the pre agreed upon price where you're going to buy or sell that underlying asset. So, you're going to see when I share with you the options chain in just a moment, you're going to be able to see the all the different strikes, and that the strikes are in a chain. So you'll be able to see what that looks like. So the strike price is the first piece of jargon you got to know. The expiration date. So that's just the expiration cycle, whatever expiry cycle that I'm trading, and then the premium. That's what you pay when you buy options, that's what you receive when you sell options. Okay. So, three basic pieces of information here. And now that we've got that out of the way, I'm going to close that up and we're going to go ahead and hop into the options chain over on Derive. So, here is Derive. And let me just make sure that we can all see this stuff together. I want to make sure that this is
Yep.
displaying properly. Awesome.
Yep.
Looks
Can
looks
see it.
good. Great.
All
Okay.
we can see all the sexiness, all the finance porn.
Yeah, that's really kind of what it is. This is but look, like, oh look, I got filled. Give me a fill, Phil.
All right.
So I got filled. So this little put, I just got closed. That's awesome. That's great. So let's just take a look. I opened this account last night live on Arena, with like 45 people watching or something like that. It was awesome, dude.
Nice.
So, yeah, I just opened this up last night and let's take a look at the trades and let's just see. Okay, so we got two profitable closed trades. Awesome, great, and that's overnight. So right now, if I hop back into the portfolio over here, and we're just going to look at the current position that's still on. Okay, so this is that short ETH perp. So I want to take a look at my Greeks. And because I don't have any options positions open, I just have the perpetual futures position open. I don't have any Greeks other than my deltas. I don't have
Now,
gamma.
quick, because somebody, Jacob was talking about that the Greeks kind of confuse them. They do me as well. There's some really good cheat sheets you can Google, and I have one set as my desktop. So I'm looking at it right now. Delta is the underlying price, directional exposure. Gamma is the change in the delta. Theta is the passage of time. Vega is implied volatility, and RHO is interest rates, usually minor in DeFi. So find yourself a little cheat sheet and just keep it handy. So whenever David's going through and talking about this stuff and using that delta verbiage that you understand. So sorry, go ahead.
Yeah, yeah, yeah. So, here, all I'm doing right now, I just want to make sure that I can see the StreamYard side by side with the arena because, dude, arena is awesome, man. Appreciate everyone over at the arena, watching us. This is really a lot of fun, and I hope that you guys get some value from all this. So, I just want to make sure that I can see the chat because, yeah, you know what I mean. So, okay,
I,
great. So,
I always learn a ton whenever I do shows with you. So I think that's why I enjoy it so much because I get to learn.
yeah, man. Arena's the place, man. Hello, Arena. All right. So we're going to trade some options here. Now, the first thing that I'm looking at is number one, I know that I've got that short ETH perps position. Let's just walk through this portfolio real quick because this is, really, really important just to walk through some of the basics. So, number one, this is derive.xyz. This is the only liquid options trading protocol on EVM chains, the only one. Now, there's Ithaca. Ithaca is another one, but it doesn't give you like portfolio margin. It doesn't allow you to like view an options chain in this way. So I'm just never going to trade on there. Like they've tried to make it super like friendly for beginners, and by doing that, they've made it retarded. So like I'm not going to ever trade there.
It just
And
doesn't
so
have the functionality that you like, or
it just so the way that it's formatted, like this is how like an institutional options chain looks. Like
okay,
if you're trading options, this is how it looks. You've got the strikes down the middle, you've got puts and calls on the right and the left, you've got your expiration up top, so you know how many days to expiration. You've got your, all of these little data points here, the most important of which is going to be, your delta and your implied volatility. So just being able to see everything on this is referred to as a chain. All of this here, everything that we're
mm,
looking at, this is called a chain. And on Ithaca, you don't see an options chain. So even though the markets seem to be maybe a little bit more liquid on Ithaca, like the way that it's formatted is really kind of a pain. So, and also the margining on Ithaca is horrible. The
mm.
margining over here on Derive is amazingly good. The only thing that you've got to be careful of is these spreads. These spreads can be really, really wide. So I just, as we're speaking, I've got Gemini Deep Research building out a little bit of research on the API, so that
Okay.
I can build a custom tool on top of Derive to learn about just view the best spreads. Okay, so let's just hop in and take a look at the balances. So notice I supplied SUSDE as the initial margin when I opened this account. So this 360 bucks that I deposited last night, that was my initial deposit. And this is pretty cool, working out pretty well. So the nice thing about depositing SUSDE is that SUSDE earns yield. So I'm earning 4 points, 4% on my margin, which
Just by
is
holding.
just by holding it. Exactly,
Yeah.
just by holding it. Now,
So that's that SUSDE is staked USD on EtherFi, correct?
exactly,
Okay.
exactly. And I could, if I click deposit here on base, dude, like I could deposit instead of SUSDE, I could deposit like wrap staked ETH. So if I deposit Lido wrap staked ETH, then not only would I earn the LST or LRT yield, which is like
Mm,
3%, but it would also give me a source of positive ETH deltas. So I could actually trade against my own collateral, which is kind of
gotcha.
cool. You could set up a basis trade on here in a heartbeat. Yeah. So really, really cool. This is a very, very useful protocol. Okay. So you can see that I've got the SUSDE collateral. You can see I've got this one short perps position open. And because ETH is up quite a bit, I've got an unrealized negative P&L, but that's okay because I actually have already been able to trade out of those two put positions for a nice profit just overnight. I set those limit orders overnight. So, really happy with that. And now, what I want to do is I actually want to sell some calls here, or at least sell a call. And so, let's just bring it back to TradingView real quick. Now, with this big move up, you want to be a contrarian. So, when I see ETH, plus 11.5%, and I see Bitcoin plus 7.2%, I'm already short on those perps, but very, very, very small. And it's linear. Those perps are linear. I want to sell some calls in addition to just being short those futures. Because if there's any type of pullback here, if ETH pulls back even a little bit, those
Yeah.
calls will get smashed. And so I'll be able to sell the calls deep out of the money and then buy them back and I'm going after like a 15 or 20% profit. I'm not trying to, make
You're
100%
not
profit
swinging
on
for the
those.
fence. You're not swinging for the
Right.
fences. You're looking
Exactly.
just 10 or 20, 10 or 20 on each direction.
Exactly. Yep.
Okay.
That's all I'm trying to do. And let me go. And I also want to be able to earn some theta. So the first thing here is I've got to go into the
Well,
correct expiration cycle.
and real quick off my cheat sheet, theta is the passage of time or time decay.
Theta, yeah, exactly. Exactly. So you got your delta, gamma, theta, vega, rho. Those are the five Greeks. Your
Yeah.
delta is your direction. Your gamma is basically the speed of your delta.
Mhm.
Your theta is your time decay.
Yep.
Your vega is the volatility component, and
Yep.
your rho is the interest rate. So, the
Yep.
risk-free rate of return, that's like your opportunity cost. So,
Perfect.
okay, what I want to do here is first and foremost, we got to make sure that we're in the right expiration cycle. So, this 57 days to expiration, I know that there's a lot of people who will want to trade options that are much, much closer to expiry, but that's just not me. I'm going to trade stuff that's, out at 50 days or so, because I don't want that gamma trap. The closer that you get to expiry, the higher the gamma can go. And so if your gamma gets really, really big, then small movements in that underlying asset will have a really big impact and very quickly on your P&L. So I really want to avoid that gamma trap of like, the 20-day to expiration or the 10-day to expiration or the 2-day to expiration type options. I'll never trade that stuff. So I'm out here at 57 days. That's number one. Number two, I want to sell calls. So that means I'm going to be over here on the call side. Number three, I want to sell out of the money calls. So now I need to take a look at my strikes. So anything out of the money is going to have a delta that is below zero point 0.5. So at the money strikes have a delta of zero point 0.5. Out of the money strikes have a delta of less than zero point 0.5. In the money strikes have a delta of greater than positive zero point 0.5 if we're talking about calls here. So I'm looking at my delta first and foremost. And honestly, I don't even really need to look at the chart much. All I need to know is what's the implied vol and what's the delta. And so, are the options juicy to trade? Like, what do the premiums look like? But notice, in none of that am I looking at the chart. Like, you don't really need the chart if you've got an options chain like this. You just look at the chain. So,
That's why you enjoy this platform so much.
oh, dude, exactly. Yeah. Because this is what I'm used to. Like, when I started trading options back when I bought my first Bitcoin in 2012, that was actually when I started trading
See,
options
people
too.
understand you started in TradFi and moved over into DeFi, right?
Basically, yeah.
Yeah.
Yeah. So, what I'm looking at here is the delta. And so I want to sell far out of the money calls, like really far out of the money. So that means, like a 16 delta. So a 16 delta call is a one standard deviation out of the money call. And so what does that mean? It means that it requires a really, really big move for this call to get tested, for this strike to get tested. So one standard deviation means that, it's like it's like a 64% chance that it doesn't get there. So very unlikely. Now, we could actually multiply the delta by 2, and that gives us our probability of touch by expiration. So 16 multiplied by 2 is 32. So that means that we've got a 32% chance that by expiration, which is in 57 days, this 2800 strike call gets touched. So this strike gets touched. That's the probability of it. There's a 32% chance of that. And I can just
Okay.
calculate that with the back of the envelope math by multiplying the delta by 2. So I'm looking, number one, at the 16 delta options because it's one standard deviation out of the money. And number two, I'm looking at it because I know that there's like a 30% chance that it gets touched, which means there's a 70% chance that it doesn't get touched. And also, since ETH is up today, if we just go ahead and bring it on over here to ETH, ETH is up today by 11.5%. That's even better. So because ETH is up so much today, I
So
can sell.
would you hedge that at all, or are you just deciding if you want to sell it or not?
So I've already decided, I already know this is what I want to sell.
Okay,
And
okay,
I'm not going to hedge it. Yeah, all I want to do is I want to be directional here. I really
yeah, yeah,
do, because with the big pump out of ETH, I really just I want to sell it. But I don't,
yeah.
I've already got a short futures position on really, really, really small. I want to sell
Because
the options
because
instead.
you feel like that there's going to be a little bit of a pullback is kind of what you're
I
getting,
do.
right?
I
Okay.
do. Yeah, I think that there's going to be a pullback, but I don't really need there to be a pullback. All I need is for volatility to compress. So what we've got to do here is we've got to get some
Well,
volatility data.
you've already made a little bit of a profit. You've made that 10 to 20% that you're looking for, right?
So I made that on the puts, on the
Okay.
short, on the puts that I sold last night. So
Okay.
those positions have already been closed for a profit. And
Well,
what I need,
how are you sitting on these that you're wanting to sell?
one more time, Mike.
Oh, just how are you sitting profit wise on these that you're looking to sell right now?
Okay, so for these calls that I want to sell down here, I'm looking to sell like the 26 and 2800 strike calls in the
Okay.
April expiration cycle over here on Derive. But what I want to look at first is what has implied volatility done. And so this is really interesting. So over here on Derive, this is actually Deribit, excuse me. So Deribit gives us an Ethereum volatility index. The most important thing that you've got to track when you are trading options is volatility. Volatility. That is the
Vol-
most important thing. It's the it's the vol.
Respect my authority.
You gotta respect the volatility
Yeah.
because like this is what you're trading when you're trading options. You're trading volatility. And so what I've got to figure out here is what's my IV rank and what's my IV percentile, because just because ETH had a really big pump doesn't mean that these options are a great sale. It doesn't mean that the options are juicy. So the premiums, these premiums here, remember, when I sell options, I'm receiving premium. So that's what I want to do, but I only want to sell options if the vol is high. So I really need high levels of volatility to be a successful options trader if I'm going to be writing premium or selling premium. And so IB rank at 34 is not high. IB percentile at 46 is not high. You want to see IB rank above 50 and IB percentile as close to 100 as possible. And you can see this, graphed out here. This is just a chart of volatility over there on Deribit. And Deribit is great just because it gives me this D-vol index, and it shows me IB rank and IB percentile. These are the three things that you need if you're trading options.
And I
Volatility.
want to point one thing out real quick, David.
Mhm.
Everything that you've said so far is based off data and off of hard numbers, not emotion. You're not like I feel like, or there's it's not emotionally based. You're everything that you're lining out so far is based off of volatility data. It's based off of the strike and all these different things you're talking about. These are all hard data points that are painting a picture on if it's the right thing to do to buy or sell these positions. So sorry, I just want to point
Yeah,
that out.
yeah, no, 100%. It's a very rigid system with
Yes.
strict rules. If those rules are not met, you really shouldn't trade. And if I'm being completely honest here, the IB rank is too low and the IB percentile is too low to be selling options. But I don't care. I want to trade it anyway because it's
Yeah.
been such a big pump out of ETH that even
Yeah.
though volatility hasn't pumped along with price, I still I want to be selling these calls, because if there's even a little bit of a retrace, then these calls will just get smashed.
Yeah.
Yeah, they'll get crushed, and so I'll be able to buy them back and make that 20% in a couple of hours. So that's what
Gotcha.
I'm looking for here. And I'm trading the 57-day to expiration options because if I'm wrong and ETH continues to pump, well, number one, I've got a ton of room until my strikes. So 26 and 28. And number two, I've got a ton of time to allow this to play out. So I want to go ahead and take a look. What would it look like here to sell that 2600 strike? So the first thing is take a look at the spread. So 60-20, so the bid, so it's 60-20 at 62.90. So that's the way that you say this. It's 60 at 62.90. That's how you would say it. Or you could say something like 60 at 63. So 60 at 63. So the bid is what we're focused on, the 60. So I've got I've got my price, I've got my order book open here. Let me just bring this over so I can see this a little bit better. Okay, so I want to sell to open, and I want to see, because I'm on this portfolio margin account over here on Derive. If I slide this to the right, let's see. Okay, so it's going to allow me to open 0.86 contracts. So I can't sell an entire contract because I don't have enough buying power in this portfolio margin account. Also, probably because I'm short futures. If I were long futures, then this short call would be offsetting those deltas from that long futures position. So long futures, short calls is a synthetic short call. Or what is that? No. So that's a synthetic, but I got it mixed up. Let me just bring it on over here to school real quick so that you guys can see what a synthetic is, because I put this together, all this research. I put this together yesterday for everyone in school, and I just want to share this with everyone on the call with us today. These synthetics, real quick. So this
And, and,
is long
this
perp.
is, and what David's pulling up right here is all from the 100% free DeFi University. No strings attached. Link below if you want to go check this out in more detail. Sorry, go ahead.
Right. Yeah. So, I see what the blockchain report's putting in the chat about takes more capital if you outright sell versus a hedge. Um, yes, but if you've got a portfolio margin account and your positions offset one another, then you can actually get much better use of your margin. And so this is if I were long the perp. Doesn't have to be on GMX. It could be on Derive. In fact, it would have to be on Derive. So if I'm long the perp and I sell calls against it, then that's a synthetic covered call. So just wanted to point that out there. Now I'm short perps, but I want to sell these calls. So I'm just adding more short deltas. So that's really what I'm focused on here is with this big pump in ETH. If we just take a look at ETH one more time, plus 11.58% today, and Bitcoin plus 7%. With the big pump, I really just want to sell. I want to sell the pump. So I'm going to hop on over here and I want to take a look, sell to open. I can sell 0.86 contracts. That's 100%. I'm going to dial it back a little bit. I'm just going to sell 0.77 contracts. So take a look. I'm receiving $45.70 in premium. The buying power required is $198.90. I've got $224 of buying power available. My liquidation price would be $22.35 because I'm also short those perps. So if I wanted to fix this, then I could sell some puts against that short call and that short futures position. So because I'm in a portfolio margin account, I can actually sell those puts right after I sell this call here. So the first thing that I want to make sure that I do is I get a good fill. So this limit price, if I want to get a better fill on this, I might just end up hitting the bid. But let's just see. I probably just want to get filled live, but I want to tell you guys how wide these spreads are. So I brought up this calculator here. So this is 61 at 64 now. So that tells me that ETH is continuing to pump. So if these premiums are going up, that means ETH is pumping. So if I go ahead and say 60, let's just go 60.7 minus 64.1. Okay, so $3.40 wide. And now $3.40 divided by the bid. divided by 60.7. So, and then multiplied by 100 here. So this is 5.6% wide. That's like you could drive a truck through these spreads, man. It's ridiculously wide.
Yeah.
So what that means is I've got to bake that spread in to my profit margins when I close the position. So
Okay.
when I go ahead, I'm just going to go ahead and sell this and hit the bid. That's fine, just so that I can get filled like right now live. So I'm going to go ahead and open this position and I'm selling that call and I got filled. Okay. And now take a look at the unrealized P&L. Instantly, I'm down. It says here 4.09%. That's the spread right
Yeah.
there that I
That's
paid.
that 5 point whatever that cut into your profit.
Right. So what I'm going to do now immediately is I'm putting in a limit order to close. And so I want to be able to buy this back for less than the premium
When
that
ETH
I collected.
when ETH pulls back, you want to use that liquidity to buy back in.
So all I want to do is I want to buy back the call. So I sold the call and I
But at a lower
received,
price.
yeah, I want to buy it back for a lower price. Exactly. So I
Gotcha.
sold the call just now. I sold that call. And if I take a look at my Greeks now I'm more short. You see, I've got more negative ETH deltas, and that's what I want.
Yeah.
Big pump, I want to be selling it. So you can see my dollar delta value and look at my theta now. I've got all this positive theta now. And that's exactly what I want. I want to be earning theta. I want to be short volatility. That's my Vega. I'm short vol. I'm positive theta. And my gamma is tiny because I've got 57 days to expiration. So I don't have to worry about gamma. Also, I'm very far out of the money. So I don't have to worry about gamma either. And my deltas are exactly where I want them to be. I want them to be short. Okay, so
And
now that
gamma
I'm
is the change in the delta.
so the gamma is the speed of the change of the delta.
Okay.
So if you got a really big gamma number, then your deltas for a small movement in the underlying, your deltas are going to go crazy. So and what that means is if you have a really big gamma, then a very very small move in that underlying asset will have a monster impact on your P&L. So you
Okay.
really want to be careful of falling into that gamma trap, which usually happens if you trade like 0 DTE options or 7 days to expiration options or anything like less than 3 weeks to expiration. You're gonna have some monster gamma. So if I've got these two positions open now, I'm short the perp and I'm short the 2600 strike call. I want to immediately put in a limit order to buy to close that 2600 strike call that I just opened. And so you can see ETH is pumping. You see that? So I'm
Yeah.
I'm watching ETH go up. I want to go ahead and put in a limit order to close, and I want to buy this back for it's got to be at least a 20% profit. And so I've got to bake in also that spread on the open. Now the spread on the close, I don't have to worry about that because I'm putting in a limit order. So as long as my limit order gets hit and filled, then I'm really just worried about the spread on the open. So remember that spread was like $3.70. So I want to bake that in. So if I go, how much is 20% of what was the I got filled at what 60, 61 or something. So I'm going to go 61 times zero point 0.2. So that means I need to make $12.20. And I'm going to go ahead and bake into that like the $3.70 spread. So I'm just going to go 3 plus 3.7. So I need like 15 bucks. I need 15 bucks on this. And that would be like a 25% profit. So I'm just going to go and say, all right, well, if I opened it at 61 and I need to make 15 bucks, then that means that I can buy it back for 46 and be very, very happy. So 46 is the limit and I'm going to buy back the whole thing. And I want to say good till cancel. Perfect. And I want to go ahead and submit that order. Awesome. Okay. So it's submitting that order to close the position if my limit price gets hit. So just want to make sure that it successfully submits that order there. Just waiting for a confirmation from Derive. And I hope that I get that order. Okay, good, 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 good. So I'm just looking to see that's the ETH perp, and there's the call, there's the amount. So buy back the 0.77 contracts. There's that limit price. It's an open, it's an open order, looking good. And okay, great, great, awesome. Very happy with that. Now I want to hop in here, take a look at my Greeks. So, negative 0.28. So I'm pretty short. What happens if ETH continues to pump? If ETH continues to pump, I'm going to be unhappy here and my buying power is going to move even lower. I might actually get forced closed on one or both of these positions if ETH keeps pumping. So I want to mitigate that risk. I'm going to do that. Hopefully, I can actually sell a put against those futures and that short call. If I can sell a put, then not only will I be able to collect some more premium, but and I want to remove that. Okay, not only will I be able to collect some more premium, but because I'm in a portfolio margin account, if I sell a put against these short calls and short perps, it's going to make my deltas less negative, which will improve my position in this portfolio margin account. So, and
Now, what he's talking about is his deltas, and so my understanding is, and correct me if I'm wrong, is the closer that you can get to basically zero, the better your position is.
a lot of traders, when they trade options, like to be kind of sort of delta neutral. Um, but, for me right now, I want to lean a little bit short. I just
Okay,
don't want to be exclusively short. I want to have some positive deltas. And, if I take a look at this 16,
if the market moves against you, if it keeps pumping, then then basically it wrecks you. So that's kind of what David's trying to do. Is he's trying to lean towards how he thinks the market's going to move based off data,
right?
but uh, but doesn't want to go too far one direction, because if it goes the opposite direction, it wrecks his entire portfolio.
Right. So if I take a look here, ETH plus 12%, you really don't want to be selling puts when the market has pumped. But because I'm already short these, short the call and short the futures, and my buying power is almost exhausted and my margin utilization is pretty high, I need to hedge these positions. So I'm going to do that by selling an out of the money put. And that 1600 strike right there, that's pretty deep out of the money. It's a 15 delta put. So that's, very, very far out of the money. I'm pretty happy with that. I just want to go ahead and calculate the width of the spread right now. So if I go ahead and, reset this calculator, I'm going to go 54.70. That's the ask minus the bid, 52.30. And I'm going to go ahead and use the API moving forward to do this automatically. But so $2.40. So if I take $2.40 and I divide it by the bid of 52.30, and then I
And then
multiply that by 100, and I get 4.58%. So still pretty darn wide. But I'm going to go ahead and see if I can hit this bid anyway. So 52, 52.30, and let's see if it'll let me sell this. Let's see how much it'll let me sell. Wow. So I can actually sell, I can sell zero point 0.7 contracts. That's pretty amazing. And it's not going to, it doesn't look like it's going to do much to my buying power here. Awesome. I'm going to go ahead and open this position and I'm just going to hit the bid. And so we're going to be able to see in my positions here, after this is opened, we're going to see the immediate negative unrealized P&L. And that's my expectation here. Okay. So I just went ahead and sold and I got filled. And here's the position. And so now there's the put. And you see that negative 3.53%. So that's the spread. I
yeah,
just basically paid that spread to hit that bid so that I could get the position on. And now I've got no buying power, but I went ahead and hedged myself a little bit. So I want to immediately put in an order to close this thing. So The close that I'm looking for here is going to be, again, like 20, 25%. So I'm just going to bring up that calculator and I want to go ahead and say, all right, well, I sold this for $51.70, and I want to make 20% on this. So that's $10. So if I then go, something like $10 plus the $3 spread, so I'm just going to go 13. So if I sold it for 51.70 minus 13,
64.
38.70. So 39. So I'm happy with buying this back for 39 bucks and buy back the whole thing. That's the limit order, buy to close, good till canceled, submit the order. Awesome.
So the
And
trend I'm seeing on all these is you're anticipating a pullback and you're wanting to capitalize on that.
all I'm trying to do is trade the volatility. That's it.
Yeah.
That's all I'm trying to do. I'm really not trying.
These positions you're opening are based off of the volatility. We've gotten the pump, and you're anticipating a pullback, and you're setting where you want to buy back in to where you make a profit of roughly 20%.
Yes. So all I'm trying to do is sell premium for, let's say I sell $100 a premium. I want to be able to keep $20 of that premium. And I want
Gotcha.
to rinse, wash, repeat as quickly as I possibly can. I want to just
Mhm.
run through as many contracts as I can. I want to
Yeah. As,
trade
as
really, really, yeah,
I'm sorry.
I want to trade really, really small, and I want to trade really, really often. And I've got to be careful of these spreads. Like that'll get you in trouble. These spreads over here on Derive, you've
Yeah.
really got to make sure that you bake that in because if you're paying 4 or 5% just to open a position, if you hit the bid,
Yeah.
then yeah, that's expensive.
Well, it eats into your profits.
Exactly, exactly. So there's the order. It looks like, so you see what happened here? Those orders got closed. You see what just happened? This is I saw this happen overnight, and I don't know why those orders got closed. So if I'm over here and I take a look at the portfolio, so I was up overnight and now I'm down 9/10%. But I want to take a look at the orders. So why did these get canceled? Oh, because my margin went to I don't have enough margin. So it closed the orders. Huh. That's so strange, but why did it close the
Now,
call?
really quick, explain what margin is.
Yeah, so the margin is just you're basically like your buying power. Like it's what you can trade. So um, if I just take a look here, I'm just really learning this derived protocol. The
Yeah.
last time I traded on it, it was called Lyra. They renamed this to Derive, and it looks like because my buying power went to zero just now, those limit orders that I put in to close
Sell.
those options, they went ahead and got closed. Those orders that I had in. You see, I had that
Yeah.
order in to buy back the put and buy back that call. Both of those orders got canceled because my buying power went to zero. Now, my margin usage is still, at 79%. I've got maintenance margin, so I'm good. And, I'm basically trading a range. So you see this, my liquidation price on the downside on ETH is like 1074. My liquidation price on the upside is 2230. So that's, I'm happy trading that range. Um, Let me hop back in here to trade. And I just want to see on the position side. So now all I've got to do is nothing. I've just got to sit here. I might
That's easy.
actually add a,
Well,
a little
for
bit
some
more margin. Yeah, I might add a little bit more margin here just so that like, maybe like another $100 or something. Just so that I don't have to worry about, these positions being forced closed if ETH continues to pump, because I really do want to be short and I don't want to get forced closed. So with ETH plus 11.9%, all I've got to do now is sit. All I've got to do now is sit, and I'm going to have to watch this because it looks like I won't be able to allow those resting orders to sit if the way their margining system works here on Derive is that if your buying power goes below zero or goes to zero, that any untriggered or open order that you've got to close an options position, if that gets canceled, then I'm just going to have to sit and watch this because I really do need those resting orders in. I need those orders in to be able to close this. So, you know what? Maybe I'll just, instead of adding a close order with a limit like that, maybe if I add it as a take profit, it might do it better that way. So, basically the take profit, the take price is 40 on the buy to close, and this is on that put. So reduce good till canceled. Okay, so I'm just going to try to submit this one more time. It should work. Okay, so now it says untriggered. It doesn't say open. It says untriggered now. So it looks like this is just a different type of order. Okay, so
So the
positions.
orders are based then. Yeah, they're not triggered.
Yeah, I
They're
mean,
not
seriously,
woke. If they were woke, they'd be triggered.
yeah, triggered. I'm not Somali. I do not get triggered. So I'm just going to go ahead and put this order in also. And I'm going to put, I sold this one. This is the call. Okay. So the call, I want to be able to buy this call back for like, really, I'd like to be able to buy it back for 40. So I'm going to put in $40 there and reduce the entire thing, submit the order because I don't want to have to sit and watch this. I need
Mhm.
these orders to execute if my limit prices get hit. And so all that really means is I don't want to be sitting around watching these. I just want this to be automatically triggered. You know what? I might actually want to edit this order here a little bit. I'm going to make this something like 38, just a
So people
little bit more.
familiar limit orders have automated buy and sell points. Where if you to market, then you have to manually do it.
Exactly. And I don't want to have to sit and try to manually, uh, you know, do that. So, that's
Exactly.
funny. Look at what I just did. So I edited the trigger price
Mhm.
and it didn't show up. So it didn't remove that other order that I've got in. That's
Okay.
kind of funky. I would have expected because the trigger price that I put in is lower than that initial trigger price, and they're both for the max amount. So if 40 gets touched, then there's no way this can ever get filled. So
Yeah.
why didn't it close the 40? I don't know, but I'm going to close the 40 manually. So I just canceled that order. So now I'm happy. Now I've got everything set the way I wanted to. I might add another $100 of margin
Yeah.
here.
I was
And
gonna say, like, you might want to look at adding some margin. Not that I fucking know
yeah,
better than
yeah,
you, but with what just
yeah,
happened, with having a lack of margin.
yeah. So I might need to add some more margin here. I think that's what I'll do. And when I deposit a little bit more margin over here on base, I've got to think about what do I want to deposit. Because if I deposit SUSDE, well, then I'm earning 4 points on it, but I get 5% less initial margin. I get 5% less initial margin in buying power. So that means if I put up $100 of SUSDE, yes, I'm earning 4% on my collateral, but I only have $95 of buying power. Whereas if I put up
So that'd
USDC,
be a net negative.
yeah, so that would be, um, well, I wouldn't think of it that way actually, because the yield on the SUSD, that's super valuable.
Oh,
Just
absolutely.
having a yield bearing token as your margin is super valuable. I think that I'm going to put up USDC as margin here because I came across something that I wasn't expecting. If I take a look at the portfolio one time and then we take a look, you see right here where it shows me USDC, this balance. So this is kind of funky because the balance here, this USDC balance, this is actually the premium that I collected when I sold that call and that put. So
Okay.
this USDC, it shows up almost like a borrow. You see, it says supply APY 1.47, borrow APY 3.04%. So I'm not quite sure if this means that the premium that I collected when I sold those options is actually something that I'm earning 1.47% on, or that I'm paying 3.04% on. I'm not quite sure, but it says it's a positive balance. So that means that at least it's not a borrow. So if it's a positive balance, then I must be earning 1.47% on that uh, premium that I collected. So, I sold those two options. I think that's what this is referring to here. So, I never want this to flip negative, and USDE can depeg. So I think it's probably a good idea that I throw down some USDC collateral in addition to the SUSDE collateral, just so that, in a worst case scenario, if SUSDE depegs, even for a brief period of time, I don't have to worry about that because I've got USDC to back me up. And then
Gotcha.
I would always want to make sure that I maintain, buying power that's equal to the size of my position. So that means I would probably want to deposit something like $300 of USDC. That way, I'm basically doubling the size of the portfolio in US dollars, but I'm making, the margin here much safer. So I think that that's what I'm going to do. I'll add like 300 bucks, and then that way I won't have to worry about liquidation, and I can just allow this to work its way out. So I think that's what I'll do. I just want to check in on my Greeks real quick. And the Greeks, so take a look. I've got a little bit more positive theta than I had a moment ago, and my deltas are less negative. So I was basically like negative zero point 0.3. So I was basically short a third of one ETH before I sold that put. And now I'm short about half that amount after selling that put. And that's exactly what I wanted, right? I wanted
Yeah.
to offset my short deltas a little bit, and I wanted to earn a little bit more theta. And so
You
that's
want you
exactly what
you
I'm
want to
doing.
be just south of delta neutral.
Yeah, I wanted to be just, well, I really wanted to lean short. So I wanted, some short deltas, but I needed, some type of a hedge on the call and the perp. And now I've got that. So the last thing I've got to do is add a couple $100 more margin, and I'm good to go. I'm good to go. So
Nice.
yeah, man. I'm pretty happy with that position. And I described exactly how to do all of this in the school community, yesterday. And so I went through synthetics in this Beyond the Stake article, synthetics on using GMX and using Derive and using the Athena products. But I really described the Derive strategy here at trading options in this article. So Tom Sosnoff is a legendary trader, and I learned my options trading skill set from him. So yeah, it's amazing what you can do with AI now, because this strategy here, the way this is described, this is a decade of research from Sosnoff at Tasty Trade,
Boiled
condensed
down.
into,
Yeah,
yeah,
a couple bullet points.
it's amazing. It really is amazing, man. It's absolutely amazing. So yeah,
Well,
and this stuff is
I'll
free.
be honest. I only understood about half of what you talked about, but I learned a ton. And that's and I just want to be real with people. It's I there you're not going to understand all this right out the gate. That's why it's so important that you use the course material so you can go through at your own pace. At DeFi University, make sure that you're tuning into the show, every morning at, right now it's 9 to 10 here soon. We'll let you know as it evolves. Going to be 9 to 11 Pacific time. But, the more that you can hear, like, data, delta, theta, gamma, all those things, it's going to sink in to where one day it's just going to be like, oh yeah, okay, I know exactly what that is. And it's all just going to click. So stay disciplined, stay focused, and make sure that that you're keeping up with your education, because this and having discipline over your emotions is what is going to make you a successful trader. It's going to make you successful in DeFi. It's going to make you successful in life. So, David, closing thoughts.
Yeah, I think that look, I echo everything that you're saying, Mike. And the most important thing for me when I see markets pumping like they are right now is taking the opposite side. I don't want to trade with the herd. I want to take the opposite side of what the herd thinks.
Yep.
So if I'm looking over here at my trading view
You
and I
got you got
see
that. Well, you didn't get it from Gareth, but he was just on his show. I started watching him after you mentioned him. He actually said that yesterday. Is he's like, I look in my comments on my show, and if
okay,
everybody's telling me I'm an idiot, and and I
then you
know
know
that,
you're
yeah,
on the
you're
right
right.
side.
Exactly, exactly.
Yeah, exactly, man. And so, when I see, okay, here's some resistance, ETH pumps, breaks out above resistance within this big downtrend, that tells me that we've got some further resistance up above. But dude, I want to sell this. I want to sell this all day long. And if I can sell it by trading out of the money calls, up in this region that I'm marking with my arrow, between like the 2500 strike and like the 2800 strike up here, if I can sell calls up here after
Mhm.
ETH pumps by 12%, dude, all it takes is either for time to pass, or for ETH to go up a little bit, or for ETH to go down a little bit and time pass, and I'm profitable. So that's what I'm looking forward to, is sitting on my hands and doing nothing and letting those options close. Letting those I want to let those options
Those limit,
hit those
those
limits.
limit, yeah, those limit orders. You're wanting those to.
Exactly. Yeah, so I mean, basically, like the most important thing for me is, just being able to take a little bit of a directional bet, earn some theta in the meantime, and as long as time passes, then and if those options remain out of the money, then it's just a matter of allowing time to pass. And you let time pass, they become profitable, and then I close them. That's it. Simple.
Perfect.
So I don't exactly take a directional bet, like not really directional, but of course I've got a bias, right? Everyone's got a market bias, and my market bias right now is to be a little bit short. So I'm very happy with that, man. And the education here, you shouldn't expect to understand options after 1 hour. It's
Well, you
it's a lot. It's a lot.
yeah, don't get frustrated. It's because, like, again, I've been, doing shows with David for a while now, and I mean, he's been doing this for decades, and you're listening to somebody that has put an insane amount of time into learning this stuff. So don't expect that you're just going to watch a couple of shows and you're going to be an expert at this. It takes time, it takes discipline, it takes focus. Get out of that mindset. This is a marathon, not a sprint. Get out of that mindset of instant gratification. Don't just jump in and start trying to do what you're seeing on this show with real, real capital, with real liquidity, and expect that you're just going to be profitable right out the gate. So slow down, pump the brakes, invest the time, and eventually, it will all click, and you'll be able to be a successful, trader. You're going to be, successful in DeFi. You're going to be successful in whatever it is that you try to do. But it takes discipline.
Liquidity.
Look, what
you
it's
need you need liquidity.
yeah, without liquidity,
Yeah, man. It's good stuff. I appreciate everyone for joining live, and yeah, man, we're gonna keep putting out amazing content like this. And Mike, I'm really looking forward to this new show, man. Being
dude.
able to go through market news.
Yeah.
Like, is there anything that's any big news items in crypto and DeFi that we didn't cover yet?
No, I mean, I'm seeing some stuff. I posted a couple of things that I mentioned earlier on in the show, in our newsletter and stuff like that. But for the most part, yeah, I'm just I we'll let you know how it evolves. I want to try to, I don't want to rush it too much, but I want to make sure, I want to get the show going as quickly as possible, because I think that this is the time for people to be, finding a place, a reliable place, a one-stop shop to get their news, their macro, to get some TA, to get some DeFi education, the options trading, just all of this different information, all in one place, a trusted place. Again, a place where we're not shilling things. We're going to be fully transparent. If we're if we're doing stuff like this and we're losing money, you're going to see that live. David was sharing his screen. It shows his P&L. It shows all of this stuff. We're not going to paint a picture that we're making millions of dollars on this channel if we're not making millions of dollars. We're going to show you the losses. We're going to show you the wins. We want to be fully transparent and be a channel of integrity. So stay tuned. Me and David will be meeting here soon and dialing all this in. We just want to get a format together. Come up with a name. Just kind of get all that dialed in. Start talking to some people about coming on the show. Like David was talking about interviews. Special guests that have special skill sets. All those sorts of things. So stay tuned. It will be happening soon.
Respect the liquidity.
But always respect the liquidity.
That's right.
And with that, thank you all.
Thank you, Mike.
And we'll see you tomorrow. Veteran Crypto out.
Peace.